In this video, we're going to be going over all sorts of examples. I did break it down into multiple parts instead of I figured making some 4-hour video. Thought if I sectioned it off, it'd be a little bit more easy to take. But these examples are all going to be of successful trades. And a couple things I want to note though. First, if you remember back to our actual 4-step process video when we broke down things between steps 1 and 11, we started off by just showing that hey, this is a environment that we want. We're just going to assume that these are all environments we want. I'm not going to go through and show the short interest on every single one, just because the point now is to see how the trade, how to manage the trade after you've already established environment. So again, we're going to skip over that first step of just checking the share structures and stuff like that. You know how to do that, and there's going to be another video later on when building your watch list that'll show you how to do that in more detail. But for this, we just want to plow through as many examples as possible in terms of how to actually manage the trade setup and looking at charts, not looking at share structures. This video is just going to be all about looking at the charts. So we're just going to assume and know that the charts we're looking at already do have that step taken care of, and they are environments that we're looking for. So with that being said, let's just hop in and get started. So here is our first example. So again, let's say you've already done your research. You found out that hey, this chart here has a pretty attractive environment. It's given us our ace card. We know that this is just a very gasoline soaked hayfield, and all it takes is that match to be lit and dropped. So you pull this up now and you're like, okay, we know about the environment, so let's see what's going on here. So the first thing that hopefully you catch and that I'm catching here is we have this low here, and then this low is even higher. And actually on top of this, look at this very nice little candle here. So a hammer candle. It didn't really signal any reverse, but regardless, the low of this very attractive candle here has not been retested, and it's not looking like it'll be retested because we've had this green candle here, and now we've had some upwards movement. So the next thing becomes example. So look, remember back to our first set of 3 examples. That second set where that resistance and major problem trigger point was very easy to see. Look at this chart right now, and hopefully you can see it. If you want to pause the video right now and look at it. But there's one level here that is very obvious, and one where we can now bend the rules a little bit because we have a level. So if you want to pause it. So now being back, if you said, hey, this level here is very obvious, you would be absolutely correct. I mean, you can see right there, knocked down the price a bunch of times, and again, knocked down the price a bunch of times. So that level is right there at $1.85. So now we're not going to wait for that big volume. We're just going to buy on a break of this level, and especially we're going to buy on any sort of big break. So you put this one on your watch list, and you go into the stalker mode now, and we just need to wait for some sort of signal to buy. And in this case, we're going to buy on the break of this trigger point here. So being that the price is way down here, it'd be one where you'll want to keep it on your watch list towards the top, but it looks like it might have to do a little bit of still it's got ways to go is what I'm trying to say. It's got a ways to go before it might even get up there and test that. So the next day comes, okay, another green day. It's looking like the shorts may be starting to get a little bit squeezed here. They might be feeling the pain, but again, shorts use charts, remember that. So they're probably sitting here looking at this level thinking, all right, that's going to be, that kind of breaks my back. That's going to be the the straw that breaks the camel's back up here. So I'm still good. I'm not going to worry about covering or anything like that. And then this day happens, and this is why you never want to fall asleep on your watch list, because sometimes things can happen like this. You can see price comes up, breaks through our trigger point, and then the shorts are, this is just a squeeze like we want to see here, and it can come unexpected, but look at that volume. That's exactly what we want to see. So now let's start to get our trade management into place here. So you enter in right there on that break. Again, let's see, this high was at $1.85, so our $1.85, that level was $1.84.5. So our trigger point was basically at $1.85. So depending on your entry strategy, we'll just assume you got in at $1.85 just to keep the math simple. So as soon as you get in, remember, so it opens here and it breaks. Next step, we got to get that stop loss into place. So what we have to do for that is look at the previous candle or previous areas of support. And what I see for previous areas of support is you look down here and you see this right here. What do I mean by that? Well, we had a level of support there, then we had it act as support again, and then this candle Again, the previous candle, previous to when you entered in. So when this candle is still forming, you're looking at this candle and you can see that is also slightly below that low. So the low of this candle is at $1.64. Adding that cushion, I'd say about $1.61. So that would be your original stop loss as soon as you enter in up here. Or of course, if you want to use for the 20 SMA folks, because the price would already be above that, this is a two option standard or two option scenario. Obviously, and I never mentioned this in the slides, but I assumed that was something that you would understand. If the price is below the 20 SMA, then that's just not an option. It only becomes an option when the price is above it. So hopefully that goes without saying, but I suppose I probably should just bring that up. But you got to make sure that the price is actually above the 20 SMA. So you have that. Two options here. So they're right now at $1.74 is what the SMA is valued at. So those people would be at about $1.71 right now. So let's see what happens the next day. Consolidation. So now that this candle is done forming, you can either, two options here, you could bring it all the way up here, which is what I would say would make the most sense. Again, waiting for the next period to start, we want to get that established. So since we're looking at the daily chart, I'll just speak in those terms. But before the next day starts trading, just make sure that you have that stop loss set. So this would make a very good sense. Now this becomes where you can see, because of the good day, our stop loss moved from down here. Remember, this was our break-even point. So this is a very attractive one because we've gotten back to break-even, and we've also gotten all the way up to right there. Now, the flip side here is that the 20 SMA people, they're still way down here. They're not at break-even. The 20 SMA after this day is at $1.76, so their stop loss is probably right around $1.74. So that's just one of the trade-offs. As you know, the 20 SMA can certainly lead to more profits, but at this state of the trade, you can see that their risk is just much larger, whereas the people that are using the previous low method of the stop loss, they've just decreased their risk by quite a bit, and also they've turned it into a winning trade, whereas these people down here, it would still technically be a losing trade. Again, neither one is wrong, but this is why I wanted to do these examples, so you can see exactly each stage. The risk is going to be different, but as you know from those other examples, in the longer term, the 20 SMA can turn out to be pretty well, but earlier on, it's all about your mental makeup and how comfortable do you feel with these levels of risk. So let's now see what happens the next day. You can see here another consolidation day. So before the next day gets started, two options. The previous low people could move their stop loss up to there or just leave it there. Me personally, and this is where you can start to bend the rules more, and it's personal preference. I would personally leave it down here just because it's already a winner for me. So hey, why not see what happens? We know that the shorts are getting squeezed. This could be them just getting a little breather before the squeeze picks back up again. But there is no problem if you'd want to move it up to there with that cushion, of course. But just understand that by doing this, you are now making it more likely that you could get stopped out before a big move. But you're also at the same time increasing the profit that you're going to make. So again, totally personal preference on that. It's already a winner. We're already at break even and beyond. So this is where it becomes very, use your general chart knowledge. If you see another support that you think you want to use, then go for it. But there just needs to be the structure of, there still needs to be a stop loss in place. So me personally, I would leave it there, but I would offer no argument because, hey, by moving it up to there, you're just making it more and more of a profitable trade. Whereas if I were to get stopped out down there, it's not going to be as profitable, but I gave myself a little bit better opportunity. 20 SMA people, they're still down here at $1.78. So while the previous low people are up here sitting in the green debating, well, how much profit do I want to have? They're still down there, not even at break even yet because the 20 SMA, that's just one of the trade-offs of that strategy. So let's see what happens next. So right there, let's see if people would have moved that up to there. Okay, so with that cushion, let's see, the low of that candle was 214. The low of this was 214. All right, so prime example number one here of why you don't ever put it right at the support, because you would have been stopped out. This low was at 214, and that's exactly what it hit. But if you put in that cushion, you would have prevented yourself, so these people would have still been in. So what happens the next day, you can see that. So again, if you really want to move that up, you could be that tight, But as far as I'd be concerned, I would still be sitting down here because I'd be thinking, all right, things are getting tight. We're kind of getting a bull pennant formation up here, so I just want to wait things out. So that happened. So right here, if these people would have been in the trade, they'd be out, or if they would have moved their stop loss up, or they'd be out with still a nice little gain. So no shame in that. Me personally, I'd still be there. 20 SMA people would still be at $1.83. Next level here, no change on my end, $1.87. So right here, I would have been out at the low of that candle was 205, so I would have probably been right around 203-ish. So I would have been out at 203 after getting this entry point up here. 20 SMA people still in, still in, still in. So I'm going to start to go through this faster since you get the point here. They are still in. So now I should have made note. Let's see, when did they actually become above break even? Right here is where they went above break even, so let's catch up now. They're at $1.90, so you can just watch the value of it right there. That'll tell you 98. Right there, you can see didn't go quite below it, but that's why you want to have the cushion in there right there. And then right there, they would have been stopped out right around 214, so pretty much right around where the previous low people would have been. So hopefully you see the trade-offs here. 20 SMA, they basically got the same profit, but they held on for much longer, and they still ended up with the same profit as what the people that used the previous low that would have had it up here. They would have made more money than people like myself that would have been stopped out down here. But for the additional time, that's up to you. I'm not going to say it's right or wrong because I don't know your strategy, but just understand that they ended up making pretty much the same amount of money, but they held on for about 2 or 3 weeks longer than what the previous low stop loss strategy people used over here. So just a trade off there, but that's how that one would have played out. Happened fast, and then nothing really got going. At this point, it was looking pretty encouraging. Hey, we might have some sort of continued upwards move, but just never happened. And that's the way it goes. But definitely a squeeze here as the shorts really got pushed upwards. So I like this example just because not a huge score. I mean, I'd call this probably a double, hitting a double, but regardless, it does a great job of showing just the trade-offs here between the two stop loss strategies. All right, for our second example, again, you've already gone through the shear structure stuff. You figured out, all right, this one's a pretty combustible environment. This is the sort of context and environment that we want. So you pull up this chart and it all makes sense. All right, this is where the short interest or the short thoughts really crept in, and there's a big building phase there. Try to get it up right here, but then some more building. However, now you're noticing that, all right, we have pretty much this set of lows here, and now we have a new little set there, and it seems to be another set is going on there. Our moving averages, you can see the 8 is now above the 20, so that's encouraging. They're going sideways, but really the easiest way to look at it is if the 8's above the 20, then you can automatically assume neutral. It doesn't really matter. You don't have to get out the magnifying glass and think, is it really going down? If the 8 is above the 20, then you're fine. And then when you compound that with the fact that you have these previous lows, is there potential here of a transition phase? Yes, I mean, surely. So this would definitely warrant going into the stalking steps of the process. So you get this on your radar, and now we're just waiting for some sort of buy signal, mainly looking for some sort of big thing of volume. I don't see any obvious just no-brainer levels of resistance, so we can't really take that. We're going to need to see some sort of sign that the shorts are starting to get squeezed. So there, nothing, but it's still sitting on your radar. There, nothing, volume, nothing to really take note of. It's still right there. So you can see, this one's taking some patience. It's just sitting on your watch list, still sitting, and then all of a sudden this happens, and boom, this is what we're looking for. Okay, and remember now we have to find a resistance somewhere above the high volume candle. And when you see that, it actually makes pretty good sense. Look at that. There's that resistance, and that's essentially what knocked down the price. So our major problem trigger point is going to be right there at 2. Let's see, this high there is at 242. So again, I know I'm repeating myself, but I'm trying to drill this into your head. The shorts are using charts too, so you can better believe, especially after that, it looks like some of them have already started to cover, that they're thinking, all right, if this level right here at 242 gets broken, I'm hitting the road, I'm covering my short. So that's going to be the trigger point, the major problem point where we're going to pull the trigger if it does break through there. So the next day you can see it opens up slightly below and comes up, and then just even more volume, boom. We definitely have a short squeeze here going on, and so you would hop in. Now as soon as you hop in, you need to add in some sort of stop loss. So looking at the previous candle or previous kind of just support levels in general, I would put my stop loss, because this is such a big candle already to begin with. Again, general chart knowledge. You can look down here and you can see a bunch of these wicks where they've had highs come in. I'd put it slightly somewhere below there. So really, basically the same value of the 20 SMA, folks, because again the price is above it, therefore it's an option. And the 20 SMA option at that point is at 227. So you could put it right there at 227 with that cushion, or you could put it right there. So they're basically the same, but you get the point. Get that stop loss in there, and that way the rest of this trading period, you'll see. Now again, also, we know that it opened there, so it probably broke sometime relatively early in the morning. If by 3 o'clock in the afternoon you're looking and it's way up there, then you can certainly bring up the stop loss to right there if you want, just to say, you know what, if something weird happens the rest of the day, at least I'll be breaking even. So this kind of assumes that, hey, you can't watch everything tick by tick, so that's where these rules come in. But yeah, if this happens at 9:45 in the morning Eastern time, and then at 3:30, or let's just say heck 1 o'clock in the afternoon Eastern time, where you still got 3 hours left, it's way up here, then yeah, more power to you. Go ahead and adjust that stop loss. That's one where here was obviously some resistance, so you can move it up to here, because that would also, not only would that get you to break even and above, that would also ensure a profitable trade. So you don't have to do that. I mean, we're going through this assuming that you can only maybe check your computer once or twice a day, so you got to just put in your stop loss right there, and then you're gone for the rest of the day. But nonetheless, keep in mind, if you are in the situation where you can watch it more closely, then yeah, go ahead. You don't have to follow these rules. There's no death penalty if you want to bend the rules. I mean, use the general chart knowledge. That's why this course was advertised as an advanced, because you should understand that when the price is up there, that's a no-brainer. Start to move up your stop loss. But for the sake of argument, let's just say you're one of those people that can only check every so often. So when this candle is done forming, now you need to go and get the next level of stop, or the next stop loss, figured out before the next trading period. So again, rules say that you should use just the previous low, or the low of this candle, but that would make absolutely no sense, and hopefully you can see why that makes no sense. Massive candle, why would I put it down here? I'm certainly getting it to at least break even. So previous low, people, I would not do a previous low, but I'd go like that one example and just use a previous level of resistance. So this high over here is a resistance at 259. Adding that cushion, I'd probably be at about 256 for the level of my stop loss going into the next day. Now 20 SMA, people, they're still all the way down there. After this day is done forming, that value is at 227. So this another good example. This is what they're risking. They're just going to go with that one. Now of course you can mix and mash. If maybe they're going to say, you know what, I'm going to move it up to there, and I'll wait for the 20 SMA to catch up. That's why I love charting. That's why I love trading systems like this. Is I'm giving you the bare bone structure of it. But if you want to add your own little flavor, add your own spices to it, I'd encourage that. Just do whatever works for you. Do whatever accomplishes your goal. So, but again, for the sake of argument, let's just assume that they're traditionalists and they're just going to keep it down there. So let's go on to the next day. You can see right here, again, moves up. We'll just go with the traditionalist. So these people are saying, all right, for the next day, I'm going to move my stop loss up to there. 20 SMA, they're down there still at 230. Then this day happens right here. So again, traditionalists, they just move up their stop loss to right there. 20 SMA down there at 234 now. Again, so you can see, I mean, from starting down here, the shorts are getting squeezed. The shorts are fighting over one another, trying to buy back shares so they can return them to their broker. So again, the traditionalist goes up to there, right here. So you could then put that right there. Then we have that, so they would move it up to right there. So this is one where you go up to bat hoping for the double or single, but this is, I would definitely consider quite the trade right now. 20 SMA is still down there. and then so we got to move that up. Still in the trade. This is obviously a very profitable one. Now we're seeing signs of trouble at this point. I suppose you can move it up a few pennies. I would probably just leave it right there, and I would be in the mindset, all right, it's looking like we're going to get stopped out. Of course, previous low, the 20 SMA people, they're still in the trade, and looks like they would be still. So right there, they are out. So previous high people would be out right around the 340 mark. So let's just speed things up and see where the 20 SMA people would be stopped out. Again, you can see the value of it right there as I go with each day. So they're still in, still in. So right there, they would have been stopped out right at around 337. And I said we got, or the previous low people, I say we because I would have personally been using the previous low strategy. So we would have been out at, what did I say there, right around the 340 mark. So again, 20 SMA people held on to the stock about 2 weeks longer, and they actually made less because they would have got stopped out about 3 cents lower than what the previous low people would have been. So I'm not saying bad or worse, but just keep that in mind. Held on longer, didn't make as much money. All right, this example I love just because for those of you that bought the course that follow my newsletter and the warrior charts, these are the ones I love to find for the volume alert category just because massive volume, look at that compared to the norm, and then the price, nothing really happens. So sometimes this could be shorts, just all getting suckered in. They're trying to hammer the price down, but it's just not budgeting. Sometimes it can be, some other factor, maybe a hedge fund or somebody's just getting loaded up. But at the end of the day, remember, we don't care about the who, we just care about the what's going on. So the thing that's going on here, like I said, big volume and the price doesn't budge. Now this doesn't mean that it's a positive thing. This could be looked at as kind of a negative thing, but regardless, I love these setups where you have massive volume and then barely anything happens right there. So looking back here, now we kind of got to see, all right, this is worth at least keep an eye on. The environment's in our favor. That would make sense. It's just been getting beat up tremendously. However, recently it started to bottom out here. There was a little bit of a bottom there, then it bounced up, found another bottom there, and then we're sitting up here. So yeah, it could very well be into some sort of transition phase. Now the other thing to keep in mind though is just because there's volume there, remember price action is king. So big volume, but it didn't really budge. So we need to see if there's going to be some sort of sign that the shorts are getting squeezed, it's going to be that the price actually starts to move up. So we're still going to need to find some sort of resistance to keep an eye on for this one. So for this, a couple different options. I could see you saying I'd like to use that one, or I'd use that one, or that one. Again, this is a good example here. I never thought about that, but this is the perfect example actually. When you have kind of a few different options, split the difference. And in this case, that's right in the middle. So hey, we'll split the difference there. On any sort of break of there, that would be the trigger point to buy. We already obviously got the volume buy signal. Now we have to just wait for some upwards price action and see if it can get through this level up there. So that's valued at 470. So 470 would be the level we want to see break. So you throw this on the radar and you can see right here, nothing really happened with it. But just because nothing happens with it short term doesn't mean things aren't going to happen with it longer term. So again, going back to my newsletter, if you follow that, sometimes it's difficult because I only have 5 days for something to happen. So this would be, as far as the newsletter is concerned, well, that was a loser because nothing ever happened. However, that's why you got to let things play out sometimes. So keep in mind, you found it here. Now it's 1, 2, 3, 4, 5, 6, 7. So it's been on your watch list 7 days now, over a week, and nothing has happened compared to the mark down there that you want. Now all of a sudden, a day you're going to say, all right, look at this. Green candle, bigger volume, maybe the squeeze, maybe they're starting to finally feel it. Get that day, so maybe now you're thinking, oh, I guess not. But regardless, keep an eye on it because again, these days volume is a great leading indicator. And then right there, things finally happen and you break, you get your trigger point. I'm going to actually zoom in here so we can see better. So you are now in, and as soon as you hop into there, it's a matter of figuring out what sort of stop loss you want to use. So stop loss, I should probably start putting these another color. We'll make that, what would be a good stop loss color? We'll just go a blue. So you get in, and whoops, right there is when you're in. So a good stop loss to me would be right down here, remember we were contemplating, well, because this level is a key level of resistance. Well, now that it's broken, key level of support, so that high is at 460, so my stop loss would probably be about 456. So as the rest of this candle completes, you can see that, okay, it never gets tested. So now when this day is over, it's time to adjust the stop loss. So that's where I would adjust it up to there. Now maybe you're thinking, well, this is a previous high, so I could, as a resistance, so maybe I could have it up there. And you could. I mean, I guess I personally want it just because, and I understand your logic on why you would do that, because, hey, it's to break even, and now we're up to there and we're ensuring a win. But remember, this is a potential squeeze. There's always the potential there for the home run. And yes, I know that, in the previous video I was talking about just we want singles and doubles, and you could be thinking, hey, I already have a single. Yeah, that's true, but things are just getting started. Don't stop at first base if you don't have to. Let the ball do some, let the ball roll a little bit before you stop moving. So, but again, I would not. It makes logical sense from a general chart knowledge. I would see why you do that, but for me, I just leave it, down here, just because I'd be thinking, all right, pretty darn sure I'm not at break even, but the loss would be very minimal at this time, and the price closed way up there, so I can't see it coming all the way down there. And then that happens right there. So after that day is over, stop loss could be up to there. Let's see, what could you do any other? So this was a level of resistance going into it. So yeah, again, I guess you could use that, but that's just too tight. You got to give it some wiggle room. So I would not do that. I just leave it, down in that area. 20 SMA people, I forget about them. They're down here at 447 still. So let's see what happens the next day here. You can see that. So previous low people would still be in if they were just traditionalists, but they really could not move up their stop loss anymore just because these are basically the same. SMA people are still in there. Next day here, looks like they would be out. Let's see, let's just, for argument's sake, the low of this candle was at 490, so I'd probably have my stop loss right around 487. That low there was at 489, so I'd still be in. This low here was at 487. So right there, I would have been stopped out there. 20 SMA people still in. Then you have that. So for surely, all the previous low people would have been stopped out after that day there. So for them, they got in down here around 445, got stopped out around 480. So maybe probably a double. Not a terrible trade, but it's by no means a home run. But then again, maybe if they locked in profits on the way up, which more power to them, that's totally fine. That would have worked. But 20 SMA, they're still in. So let's just see where that goes. You can see there close, but did not hit. So you can see there, getting close again, and they would have been out right there at approximately, let's see, right around the 461. So again, 461 they got out. So they held on longer and didn't make as much money. So again, just something to keep in mind for the 20 SMA strategy. So in this example, we're going to use a little bit more of our general chart knowledge, but again, you check the share structure, okay, the environment is in our favor. You pull up this chart and okay, it's clearly, you can see here, bearish thoughts, some major building happened right there, but more recently you can see it's leveled off. But then at a closer look, you can see it's got a nice little interesting pattern here that we have. So let's draw that line up there, and then we can draw that line like that. And all of a sudden, as you're hopefully saying to yourself, hey, look, we have a symmetrical triangle pattern, wedge, whatever you want to call it. So at this point, don't really need to have a high volume day before we can put in our trigger point. We basically already have our trigger point. In this case, the trigger point is a chart pattern breakout. So again, bending the rules a little bit, but bending it in a very logical manner. Symmetrical triangle, and a symmetrical triangle in a very combustible environment. Hey, that makes sense. So not looking for any sort of major volume now. We're just looking for a chart breakout, and we're certainly going to buy on a chart breakout with big volume. I mean, so that's just a no-brainer decision there. So we have this on our radars. Let's see what happens. So nothing there, but it's still within the wedge. The wedge hasn't been violated either direction. And then right there is where the chart breakout happens. Extend that over some more. So right there, you hop in. and now you're in. So when you get in right there on it, first thing you need to do is figure out a level for a stop loss. So again, looking at the previous candle or previous areas of support, I'd with the entry there, I'd want to give myself plenty of wiggle room. So in this case, I'd probably head down to the below of this candle. If you wanted to head down there below these all lows, that could still work. I'd probably do it right around there. So that low was at, let's move this up some. This low was 182, and we want to add in that cushion. So that would be, I'd probably put it at about $1.79. But anyways, after this day, as we already know, it does close way up above there. So my new stop loss, again, let's use general chart knowledge and some common sense here. Could you put it down there? Yeah, I suppose, but when you have such a big candle like this, you might as well get yourself back to break even, which is going to be right about there, and then you can go up and use this level of resistance up here as your next stop loss. So now you're at break even plus some. So now worst case, it's a losing trade. So again, these big candles like that, use a little bit of chart common sense and just don't throw your stop loss all the way down there, because that's what the rules say. The rules are there if it's not a massive green candle, but when the candle is massive, bend those rules a little bit. So the next candle is up to there. Previous low, people, move that stop loss up to there with a little bit of a cushion. Got another one, so move that up. 20 SMA, people are still down there at $1.89 area. So right there though, previous low, people are out. So I hit a single here, very short-lived chart breakout, but hey, you made some money, you got on base, that's the name of the game. 20 SMA people are still in, so we'll take a look at that. Still in, still in, they're still in, still in, as you can see. Now it's looking like it's getting kind of close, but didn't hit it, so they are still in. And now you can see they're up above where we got stopped out at. Down here is where we got stopped out at. They're up at this point now. Potentially stopped out there. Let's see. On that day it was 209. And so if you add in a cushion of, let's say, 206, how low did this candle go? 209. So nope. Good example low of it bouncing directly off that level of support. So they are still in, they are still in, they are still in, and you can see that this big move has happened. Still in, still in. I'm getting tired of saying this. Still in, still in. Are they going to get so right there stopped out. So you can see it right there. So this is where it finally peters out. So somewhere right up around here, we'll just call it even 250. The 20 SMA people get out. So now this is an instance where they held on for a longer time, for a much longer time, and they made a lot more money. So for them, they got in down here around the $1.90 mark. This was probably, I'd call it a home run for them. Sure, they had to wait a while, but this is a long developing home run where the previous low people, so people such as myself that were just doing the quick scalp, they still had a nice little base hit here, but they didn't make nearly the amount of money that the 20 SMA people did. So again, this is one where I'm not going to say one way is better than the other, just because it's all about what you're trying to accomplish. But just an example here of how in this case it wasn't the 20 SMA held longer and made less money. It was they held longer and made a lot more money. So a good example of that. So looking at this example, you looked at the sure structure, figured, all right, this one's been beat up pretty good, and that would make sense. Lower highs. You can see a big building phase just happened right there. However, in the medium to short term, you can see that the price seems to have leveled out. Well, not seems to, it has leveled out with that low, and then it's also got this upper channel up here. So it's one where you throw it on the watch list. I mean, it's certainly a potential transition phase, especially with the price the way it's been chugging forward. And really, what just caught my eye is if you look at these two, now you got a situation of higher lows, that being higher than those. So that's encouraging. So yeah, certainly worth answering the question. Yes, there's potential here of a transition phase. So getting on your radar. So now you're just looking for some sort of volume indicator that maybe it's getting ready. The shorts are getting ready to get squeezed, so you can see nothing's happening. Actually, I'm going to zoom in some more. There we go. So you're just looking still for something, and then this happened. So big volume there. However, kind of a goofy candle, but again, kind of my favorites where you have a big volume and then just weird action here. So at this point, you're thinking, all right, weird action. That at least gives us some sort of trigger point, because that's where the shorts regained control of things, obviously, and then hammered it back down. So what would be a level that would make sense? Then you could look over here and say, all right, you can see that up here acted, there's a little batch of resistance levels. So I'll make that as the key level. And be honest, I sort of already knows what happens, but at this, if I put myself in this frame of reference at this point in time, I would be thinking, well, this one's going to fall off the watch list, because I don't foresee this one ever coming all the way back up there and retesting it. This was too big of an upper shadow, so I'll put it on the watch list, because yeah, I like this setup with the big volume and then goofy price action. I like the fact that it's in the environment of the shorts, probably getting themselves in a little bit too deep. But I'm going to put this down towards the bottom, just because this upper wick here, I don't foresee that ever getting broken. But regardless, get it on your watch list, and then you can see kind of what happens. So here, nothing. That day would pique my interest. This would probably move it up the watch list a little bit more. Hey, look, volume is increasing again. Price action is increasing. So that sort of day would move it up my watch list. Here, that would move it right back down my watch list. Dare I say, potentially even drop it off my watch list. But I wouldn't have any right to do so. So that would be an amateur move if I did take it off, because it's not like this trend line here was even violated. So although that might cross my mind, I'd like to think to myself that I wouldn't make this rookie mistake here and take it off just because it had one bad day when the overall trend was still up. But who knows, I've been known to do stupid things. But let's just assume I keep it on my watch list. So that goes on, and then assuming it's still on, this day would definitely trigger it, like, hey, good thing I left it on my watch list. Good thing I didn't make an amateur, mistake. That's how I'd rationalize that out. Huge volume, big price reaction, but still not here. We need to see some sort of sign that the shorts are gonna really start to cover. So then this day happens here. Sorry, the chart shifted because we're losing stuff over here. But regardless, there's our point still up there, and then right there is where the break finally happened. So it took some patience and it took some willpower to keep it on the watch list, but there was a break right there. So on this break, finding a level of support to do so, I think this one, I'd have a pretty tight stop on this one, simply because it gave us a good clue. Whoops, let's change this to the color we want to use. And the good clue was, maybe you already saw it, look at this, 4 days in a row it came up there and bounced off a 123. So I'd put that stop loss right there at 122. If this level can no longer hold, then I don't want in. So you can see when it broke up there, I went back and checked. This was early morning action, so I would have never been in when it came down there and hit that. But it broke there, and then when this day did close, now you have you can either leave it down here if you want to be a traditionalist. I personally would be like, you know what, if this is a big green candle, I want to move myself up to at least break even. So I would have my stop loss right there at break even. We'll get rid of this now. Then you can see the next day there with another big green candle, moving it right there. Of course, sorry again to that 20 SMA folks. They're down there at $1.18 still. So we're well above in the profits. The 20 SMA folks, they're still not even at break even. So, but with that previous example, you can see where it could pay off. So there's that. So we got to move our stop loss up to there. With this day there, you could move it, leave it there, or move it up. No way is wrong. I would personally just leave it here, because I'd be thinking, hey, I've already got, this is already a winning trade. Let's see if this is just consolidation day. I don't want to get stopped out right before it starts to head back up, so I would leave it right there. And then you can see I would have been stopped out right there. However, the 20 SMA people are still in, so an entry point down here right around $1.27 would have been stopped out right around $1.40. So again, nothing huge, but hit a single. Maybe you could consider it a double. I'd probably just say a single. Got on base. Let's see how the 20 SMA people do. So we'll keep an eye on this. So they're still doing all right, doing all right. So now they just came up here and are basically at where the previous low people, where their gains ended. So let's see how much further. Now they're going to be making more money. Going to be making more money. So they would have been stopped out right up there around the $1.46. So they made slightly more money, but held on for basically another 3 weeks longer. So just something to keep in mind there. This next example here, a little bit different, but follows the same principles. Bullish environment in turn. Well, I take that back. It's technically a bearish environment because we're in the negative downtrend. However, bullish environment from our perspective of, hey, the share structure and the short interest is all in our favor. So you pull this chart up and then you think, oh, look at this. Some pretty interesting candles, a bunch of dojis, big volume here. So is this the bottom? Is this the shorts finally? Is this shorts trying to push it down lower but not being able to, because now all of a sudden there's demand that's rising up for the stock saying, hey, we'll take it. So the shorts are trying their best to push down, but it's just not budging. Again, that's not enough to just go in and say, you know what, I'm going to buy right here. That's we need more confirmation than that. But that thought process is certainly logical, especially when you look at all the building that's been going on, and especially when you look at the history and see I need confirmation because these two were pretty short-lived upwards moves. So, but certainly one that I would put on my watch list just because, again, dojis, big volume. Hey, let's see what happens. So the point, if I'm a short looking at this, I would not want to see, and I should keep in mind, we've already obviously gotten the volume confirmation. Now we just need to figure out a trouble trigger point. So the major problem area is going to be right here. I would put simply right there at 780. So that'd be the level I'd want to see broken before making any sort of action. So right there you can see it goes back up. Now on that entry, let's put our stop loss in. You'd need to put some other, and this one is pretty darn easy. You just put it down here. If these previous lows are broken, then I want out because I know that the overall context is bearish, so I'm not going to give this much one wiggle room. If it comes back down here and violates those lows, then peace out, see you later. So next day here, it's up there. Now you can start to work your way up. I would move it up to right there. So now I'm not at break even yet, and remember, we can't rush that. You got to let the chart dictate that, and when the chart allows for you to do it, you do it. But at least my risk now has been basically cut in half now, so that's still where that sits at this day here. Now again, if I want to be a traditionalist, yes, I can move my stop loss up to there and I'd basically be at break even, but I then essentially have zero wiggle room at all. So we all know that was the break point. So this is an area where I was already willing to risk this amount, and I've already cut that risk in half, so I would just leave it right there. I mean, you could move it up more, but for my rationale, I was willing to risk a lot more than what I'm risking now, so I might as well just leave this right here, leave the same, and move it up. But there's certainly no way I would do that just because there's no wiggle room, and I'm still at break even. So it just really wouldn't make sense. Next day here, and although it would have worked out, I guess right here, because it would never violate that low, regardless, that still doesn't make much sense. But now after this day, bigger green candle, I would move this up. So still, though, not technically at break even. So this is one where we got to wait a little bit to get up to break even. You got to be patient. You got to do it and let the chart allow for you. And I should have noted, we are below the 20 SMA. So sorry, 20 SMA folks, you only have one option on this one, and it's the previous low. So I should note that, and I probably should have made that there. You need to know how to execute both strategies, just because sometimes this one's not available. So if you're thinking to yourself, you know what, I'm just going to do the 20 SMA because it's so darn straightforward, hey, I don't blame you. But at the same time, when you have setups like this and it's not an option, you still got to know how to use the previous low. So that day, almost at break even, not quite there. And then that day happens, and then finally, hey, we can get up to break even and beyond. That day happens there. You can move that. Now it's more of a winning trade. You can see the price is now above the 20 SMA, so if you wanted to start to use that, now you could hop in and start to use that. That day right there, again, it's already a winning trade for me, so I wouldn't leave that. I wouldn't move it up right there, but if you wanted to, you could. And let's see, if you did on this, those people would have been out I would have still been in. So I'd still be in. Again, I'm leaving it here and I'm not moving it because I'm already beyond break even. I've already made money, and I want to see, I want the ball still potentially rolling here. So I want to see just how good of a hit I can get. So I'm going to still stay in there. This move here, now that it's moved up some more, I would probably move it up just a little bit to right above these lows. 20 SMA, they're obviously still in. Still in, I'd leave it right there. So there's some patience being required. After this green candle, I'd move it up some more to right slightly below this candle right there. And then this happens right here. This is where the patience pays. Big move right there. So again, you think, well, you just put your stop loss there because you knew this move was coming. Fair enough point. But let's just go back to, put yourself in these shoes. Here was break even. And when you got up there, it was this candle right here. So now you're at break even and it's a winning trade. So you could have moved it up to there and that's fine. However, why would you ever move it up to there to gain a few extra pennies when that tight? It's already a winning trade. Just leave it down there. I mean, or heck, actually this is a bet. I actually would have made, I'd kick myself if I would have actually used the low of this candle as a stop loss. Why? Because we have this established set of former levels of support that were resistance that are now back to support again. So really the correct stop loss would be down here right below this batch here. So I actually, in this example myself, made a mistake by putting it up too high because we have this, what I can't use the word obvious because I missed it, but it should have been obvious level right here. Again, key supports turned into resistance, broken again, now they're support. So that's where the stop loss should have been. So actually, it worked out where, this was stupid on my part where mine was. This would be even stupider when you have this back here. So using this as a stop loss, and see, I'm doing these things kind of live. Sure, I know what happens, but I don't break these things down step by step and know what every little thing is. So you're in the inside of my mind to an extent to see how my mind operates. Again, I know what's going to happen, but all these little minor details, I haven't looked over every single example like that. So, but regardless, this is where the stop loss should have been with the cushion. So either way, though, you can see now after this move upwards, yeah, that's where I'd start to move it up, use those lows. No problem with that. And after this candle, yeah, I could see it moving up to there if you wanted to. But point being, if you executed and made use of, what hopefully and what obviously was a level, then you would have hung on into the trade, and then you would have being able to take advantage of this. So let's get back to the trade. So again, with this one, huge green candle. Do you want to leave it down there? I guess you could, but let's figure out let's find some resistances that have now been converted into supports. The one that catches my, let's see, that one. Nope, that's way too close. Not enough wiggle room. What about that? And I'm looking back here, and still not enough wiggle room. I want to see, things could really get explosive here. Here's another little area. So I'd probably put it right around here somewhere as a stop loss. 20 SMA, those folks, they're still in. Then you have this happen. So again, let's see. So that actually times up perfectly. Look at that previous high. That's where the low was. So I would leave my stop loss right there. Would leave it right there. Still not going to be moving. Not going to move it. Not going to move it. And let's see if I would have been stopped out right there. Let's see the low of this candle, let's see, the high over here was 1154. This low was 1160. So if I would have split the difference, I would have been at about 1157. How low did that go? 1154. Okay, so I would have been stopped out right here. But 20 SMA people still in. Still in. Still in. So now they've made more money than what the previous low have, and then right there they would have been stopped out right here. So they held about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So about 3 weeks longer, and they did make more money. But hey, money maker for everybody. This is a home run. This is the one that are unexpected. I mean, because I'll be frank and honest with you. During this portion here, where all the sideways action's going on, I'd be thinking, come on, just move, do something, will ya? And it finally does. But boy, a lot of patience, and let's think back to the very beginning. Remember how long and how patient we had to be just to get back to break even? So this is one where, great example of how just let the system unfold. Sometimes home runs aren't going to take place in 2 or 3 days, like in some examples. Sometimes they take a while, and this one certainly took a while. But that's why you follow those rules, follow the system, and you do what you're supposed to do, because this will happen. Is it going to happen every time? No, but be patient and just let things play out the way that they're going to play out. All right, a final example for this video. Again, pull up this. You know that the environment's in our favor. Looking back, it totally makes sense. Building, higher low, more building, higher low, more building. You get the point. However, you pull this up and you think, all right, showing some signs of life. We already know that it's potentially a transition phase here. And to me, there's a pretty, I think, obvious level of resistance that we could throw up here. That being right here. So hopefully you took note of that. So actually, let's just zoom in. It's probably even easier to see once we zoom in. There's no really need to have it at this type of time frame. So you zoom in, and now, yeah, it becomes much easier to see here. I mean, look at this. All sorts of upper shadows here, bouncing right around this area. 1, 2, 3, 4, 5. So right here, sticks out like a sore thumb. I guess really, if you would have pulled this chart up earlier, you could have maybe looked at something like this and then bought right there. But let's just assume that we pulled it up when the chart looked like this. So now we need to find something that's a little bit higher, and that sticks out pretty big. So we'll split the difference there and call this level up there at 1442. So 1442 is a major problem level. You put this on your watch list, and let's see what happens. Oh, and actually, let's take a look at the MACD. I haven't been doing that recently just because first want to just drive home that price and volume action is the key thing, and then because remember this was in terms of our level of importance. This was our fourth. So looking down here at the MACD, no red flags. Put in higher low, so it's not like it's got a negative divergence for us or anything. The one nice thing is you can see here it's crossing over 0, so that's encouraging. But at the end of the day, we just need to see the price action act in our favor. So let's go back to volume. Let's just see what happens. Next day goes in, and you can see right there peaks above, so we'd have been filled right there. On that fill day, our original stop loss. Let's try this again. There we go. So on the day we get filled, we'd have had to find some sort of previous level of support. I would have just used this previous high here because remember, got filled way up there, so our risk would have been down there. Again, little common sense. You get filled way up there. Do you really want your risk to be the size of this square right here? That's a little bit too much. Cut this in half by putting the your stop loss slightly below that. That's essentially you just cut this in half, your risk in half by just using some general chart knowledge and common sense of that. So I would not put it there on the entry. Again, entry was up there. I'd put it slightly below this previous high there since that was a resistance. But now it would be in. When this day is done forming, again, I would not move that. I would just leave it right there as my stop loss. No need to drop it back down here after such a big green candle. Might as well just leave it right there. Then you can see here next day it looks like the squeeze is officially underway. Big volume bar there, big price action. So get that out of there. At this point, such a big green candle, I'm at least moving it up to right here to break even. So I'm now at break even on the trade. Right there, even bigger. Move this up there. And when I say even bigger, I meant the volume even more. So the shorts are certainly getting squeezed here. Again, move that up right there. And then the squeeze just continues. Look at that volume. This volume bar makes these ones look like nothing. So, I mean, this is a classic short squeeze here. And then that happens. I would probably be expecting to be getting stopped out here relatively soon. When you have this inverted hammer like up here at the end of a big move, even bigger volume, so maybe some sort of capitulation volume where the shorts have probably started to regain control. So right there, I wouldn't move it. Again, I'm here. I might as well just leave it there with those lows being the same. 20 SMA, they're down there at 1443. So they just actually entered into. They just broke even. We're up here, dancing around in the profit. They're just breaking even. There, I would leave it the same just because all our lows are essentially the same still. And then we get that. So that was a nice little move there. So that goes up there. So now we are still in. And if you haven't figured out, this is the home run that you're looking for. We got in way down here, and we're just enjoying the shorts pain. So after that, move that up to right there. There, would leave it the same still. After that, who knows what I would do at this point, because I'd be in such a home run. I guess we'll just move it up there. I don't know if that would be. So right there, it gets stopped out right around 26. So you got in down here at 1442, almost 100% move. So this is certainly a home run. This is what we're looking for. But hey, 20 SMA people are still in. So let's see how they do. That bounced right off it. So with a cushion, that would not have been a stopped out there. They're still in. So right here, they would have gotten stopped out less than us. So again, they were in this longer and didn't make as much money. Still made money, but didn't make as much. But we'll have more examples where you'll see that if you followed this method, it would have really carried you on to some big gains. So that's going to be the last example for this video. We have plenty more examples coming. So, or I have plenty more examples coming. But again, use common sense, use your general chart knowledge. That's what I wanted to establish. You've seen both the pros and cons of the stop loss systems. So it's really on you. And again, like I reiterated in the first 3 examples we did on the with all the PowerPoint slides, during this phase, you can be locking on profits on the way up. But this is also why you don't want to sell all your shares and then leave back. Or by probably this point here, I would have probably only had about 25% of my shares left. So again, the math there, let's just say I bought 100 shares. Probably right around here, I'd have 25 shares left, and I just let those ride all the way up here. But this is why, sure, we're not going in there trying to hit a home run, but sometimes home runs happen, and you want to be sure that you still have shares left to take advantage of that. So prime example here of why you want to hang on to some of your shares. Locking profits on the way up, go for it. Do it. I'd highly recommend it. However, I would never recommend selling every single share you have, just because you'd be kicking yourself. This would haunt your dreams to know that you sold all your shares too soon and then missed out on this home run short squeeze here. So keep that in mind. Like I said, we'll have more examples coming, so hang tight.